Hi, this is the Mortgage Answers. It's April 22nd, 2011, brought to you by the Mortgage Advantage, and I'm Diane Gerdes. Question. We had a question from our agent who asked that our client makes good money, but the income has been declining, and the lender is having trouble getting him approved. So what's the answer? In our economic times, declining incomes is more often the norm than not, whether it be salaried or self-employed. And in today's lending environment, your income is one of the three crucial pieces to buy a home. The other two are income and assets, assets and credit, and we'll talk about those later. Underwriters judge the worthiness of a borrower by their income level, and also not so much the income level, but the ratio versus what you make versus your monthly consumer debt. And if your income has been declining, then the fear is going to be that the income will continue to decline to the point that the borrower cannot afford the house payment, or worse, maybe not have a job anymore. So typically for salaried employees, we can go to the head mucky muck and they can write a letter talking about rainbow and bluebirds, and as long as there is proof that the income is either stabilized, and that's the income they're going to use, or it has increased, then you should be okay. And keep in mind, they're going to use today's income, not future income or yesterday's income. Also, if you have bonus income or overtime income, they're going to want to see a strong 2-year history of that, and with no breaks. The self-employed, it sucks. You're going to feel pain. On self-employed income, they only use the adjusted gross. So if you had made $60,000 last year in receipts, wrote off $40,000, they're going to use $20,000. That's what they're going to use for income, and they're going to average it over 2 years. So in 2010, if you did better, 2009, not so much, they're going to average it. Also, they're probably going to want a strong letter of why 2010 was better. They're also going to may want to see 2007, 2008 to show past stability. If you're self-employed and it's continuing to decline, that may be a challenge, and you're going to have to provide letters on what's happening. Maybe the profit level's still there, but it is going to be, the self-employed borrower is going to go through more hoops than the salaried borrower. Also, we did a loan for an established veterinarian. She bought just to let you know, she bought an MRI machine in 2009, and she makes great money. But you wouldn't believe the documentation that we were asked to provide to show that the reason why her adjusted gross was less, even though the receipts were stable, because of this MRI machine. And she provided it. She wasn't happy, but then again, neither were we. The documentation is brutal, and keep in mind that anything you provide us, the lender is going to go to the IRS and document what's on file at the IRS is what you gave us. Also, FYI, 2010s, if you just filed them and did not go get them stamped at the IRS, you may be delayed in closing until the IRS can validate those 2010 taxes, if indeed there's income off those taxes the lender requires. So like any good Boy Scout or Girl Scout, the motto is be prepared. There is no such thing in our lending environment as too much documentation. Guys, have a great weekend. Thank you so much. Bye.